Welcome to Nasdaq TradeTalks, where we meet with the top thought leaders and strategists in emerging technologies, digital assets, the regulatory landscape, and capital markets. I'm your host, Jill Malandrino, and joining us this afternoon, we have Adam Sullivan, CEO of Core Scientific, as well as Jim Heidell, energy and utilities expert at PA Consulting. We're here to discuss AI-driven solutions and the corresponding demand for computational power and how that's expected to remain robust through 2025. It is great to have the both of you with us. Welcome to Trade Talks. And Jim, that really is the question that we're looking to solve for, how we're going to meet this demand that continues to grow exponentially every day.
Yes, Jill, I would thank you for inviting me. Yeah, I mean, the growth is huge. Not all the demand being met currently. And I think it's going to take a little bit of patience on the part of the AI and Bitcoin industry to meet the growth that they want. It's, as you say, it's exponential and something we haven't faced before.
Right. And Adam, that's what we're trying to solve for, is to figure out, well, we know there's going to be sustained growth in AI. That cat's out of the bag. And, virtually every industry is leveraging some sort of emerging technology, such as AI, and that power demand. Now we have to start thinking about, how do we triage that, and how is this going to be sustained? What are your thoughts around that?
Yeah, I mean, the first step here is people are trying to solve this utilizing software. Obviously, we saw the DeepSeek news that brought down the actual amount of compute needed to power large language models. I think what we're going to see going forward is continued efficiency growth, not only at the chip level, which is the natural evolution of the GPU market, but we're also going to see significant software layers put on top of it to create more compute out of the existing GPUs that are being utilized. And so it goes back to Jim's earlier point. I mean, we're short nearly 2 gigawatts of data centers in the United States this year just for NVIDIA deliveries. So there is a significant shortage that is trying to be solved for. But that shortage is going to roll into 2026. That's going to roll into 2027. There's just not enough power available in the locations that hyperscalers, who are the main drivers of this demand, there's just not enough locations. And so this is going to be one of the main drivers that we're going to see come out of NVIDIA, building new software stacks. We're going to see a lot of new startups coming out trying to drive greater efficiency out of this industry, because it's a requirement and a necessity at this point to sustain the amount of growth that we're currently experiencing.
Right. And Jim, I think that's a great point that Adam makes, is enterprise of all size is going to be leveraging some sort of solution to be able to advance their strategies forward, which just means more demand. I also think in the absence of regulatory framework and policy, that there are a lot of unknowns out there. That also adds to the challenge as well.
Yeah, I mean, there are huge challenges out there. And I think, as Adam knows, and as Core has done, is that data centers are also moving around the US, where before everyone wanted to be located in Virginia. Then we saw a huge amount going to Ohio. But, we have Texas is a huge area, North Dakota, Mississippi, North Carolina. So the data centers are moving around the country to where there is more power already available and more interconnection to the grid. But I think you also raised an interesting point, that regulators are increasingly concerned about what this investment is going to do to the average consumer.
Yeah. Well, I think there's a couple of things here. One, it sounds as if it's happening at the jurisdictional state level, right? So there's some lack of cohesiveness there, because there really hasn't been federal direction, and the states are having to make up for a lot of that. But Jim, the point that you make in terms of these projects are capital intensive, and it's not an immediate ROI. This could take decades to see these investments play out, especially when you think about generation and transmission. The technology is moving faster than the infrastructure can.
Well, it is. And I think, to put numbers on it, I mean, this could be $1 trillion of investment. And so this would be more like doubling the amount that we're spending every year on the electric grid that we're currently spending. And so I think there's going to be a lot of impacts. I mean, supply and demand, more people wanting to build transmission, more people wanting wind, solar, advancements and investment in nuclear. This is also going to raise cost. So I think you're also going to have a little bit of a feedback mechanism in terms of the pace of development and what AI developers are going to be willing to spend in terms of what the profit model is. So yeah, I don't think it's a story.
Adam, when you think about the macro implications of AI, how do you think, that scenario could look like and the way the AI boom is really reshaping digital infrastructure?
It's definitely restructuring digital infrastructure. I mean, the one point here is that the power industry moves in decades versus the technology industry that moves multiple times in a single decade. And so we have these two competing forces. And to Jim's earlier point, there is going to have to be greater regulatory push in order to actually move the utilities at the pace at which technology is moving today. And so, I mean, what we're seeing right now is just a complete advancement of utilities. We're seeing payments from technology companies to utilities to build new generation. We're seeing technology companies actually becoming their own generators in certain geographies, which is probably one of the more interesting things. But this has huge implications. And I actually would counter one of Jim's points, which is, we're seeing in some locations where there's significant generation, not only on the renewable side, but also on the firm generation side, which is necessary for the development of digital infrastructure. We're actually seeing them selling power back to the grid at certain points during the day, which is probably one of the more interesting developments that we're seeing across digital infrastructure. We're also seeing it from some of the other data center providers who are being speaking very strongly about raising new capital specifically for power generation. So this is going to have massive implications on the US grid, especially in locations where power is in a shortage today, because the new generation may end up coming from the digital infrastructure industry and not the utility industry.
Yeah. So Adam, when you think about it from Core Scientific's perspective, what are some strategic pivots that you're doing around this trend?
Yeah, we're working very closely with utilities. So today we're currently operating 7 different utilities, and it's incredibly important to have deep relationships, because at the level that we're drawing power from the grid, we are a true partner to the utility at that scale. And so we are working very closely with them on their future generation planning, because if you are at that scale, if you're at the scale of hundreds of megawatts, you are at the level where you need to work very closely to plan the next 5 and 10 years with that local utility to ensure that they have the generation in order to meet your demand over the long term, and to ensure that they have a stable grid. Because if their grid's unstable, it's our problem as well. And so we have to ensure stability across all of our local utility partners. And that's the reason why we're spending so much time and spending a lot of capital to ensure that we have the right power infrastructure surrounding our facilities, which also ensures the greater stability for the local community as well.
Right. So, Jim, it sounds like the execution of this is really dependent on public-private partnerships and how that's going to evolve. Because again, these projects do take multiple decades, and you can't just, flip on a switch and a utility is immediately available to you, because you're thinking about how you're going to triage these power resources. What are your thoughts with how important PPPs are to this?
Well, I think they're very important, and I think the point that Adam raises about investment by the industry in addition to the utility. I mean, the utility is interested is traditionally makes this generation and transmission investments that are recovered over 30 or 40 years. So regulators also are concerned about protecting all the consumers, because we really don't, we know computing is going to be around a long time. We really don't know how long this demand will be and what shape it will be. So there are large risks. But as Adam said, I think the capital coming in from the private sector is a really critical part. One, in terms of a source of capital, but two, I think even equally important is shifting the risk to this AI sector, crypto sector, and shifting the risk from the residential consumers.
What about other sources of power outside of the traditional grid? We're starting to hear more about rebuilding nuclear capabilities to help, alleviate the demand on a very stretched grid.
Sure. And so, restarting 3 Mile Island, 800 megawatts is a huge piece. But, we're talking about restarting nuclear power plants that might be 1 or 2 gigawatts. And I think Adam is thinking about an industry going forward over the next 5 or 6 years that needs 80 gigawatts. So that restarting the power plants is just a small piece of the puzzle. But then again, we have a lot of interest by Microsoft, AWS, and others in terms of investing in small nuclear reactors. But remember, that's a technology that we're thinking about 2035. The first ones might come on in 2030, but That's 2035. And I think Adam's trying to solve a problem over the next couple of years as well.
Yeah, well, I mean, and that's really part of the challenge as well when we think about the energy transition. There have been a lot of aggressive goals that are due to be met in 2030, which is, just under 5 years at this point. And it seems as if the infrastructure side of the equation hasn't been figured out, right? The product is there, we know the technology is there. But Adam, when you talk about 80 gigawatts, put that into context for us. How much power is that?
Well, I don't know if it's necessarily the entirety of the 80 gigawatts that's necessary to fuel the digital infrastructure industry over the next decade or 2 decades. But I mean, you're talking about consuming as much power as the state of Texas. And so when we talk about those levels of power, but it's really thinking about, what about 500 megawatts? What are we talking about when we're talking about a gigawatt of power? And we're talking about small to medium-sized cities in terms of how much power they actually do consume. And so when we think about building generation, especially when we're thinking about building firm generation, which is one of the most important parts about our grid, because the renewables issue will not be solved via batteries, at least in the short term, in terms of where we are at with battery efficiency today. It would cost trillions of dollars to solve a city's or a small state's problem in terms of how much batteries would be needed to run it entirely off of renewables. So when we think about this long term, we need to think about building more firm generation power. Hyperscalers are ahead of the curve here, really thinking about nuclear generation and working with states to ensure that they can build new nuclear generation over the next 5 to 10 years. But to one of the earlier points, nuclear power generally takes at least 10 years to build. And so what people are mainly focused on today is more natural gas generation being built out. And that's going to aid not only the data center and digital infrastructure industry, but it's also going to aid local communities as well, having that firm generation power available to them at all times.
Yeah. And Adam, this goes back to the point that you were making about batteries as well. When you think about scalability and affordability, we also have to, take notice of making sure that we have the appropriate skill set when it comes to the designing and engineering of this technology and being able to supply that demand, and as well as being able to maintain all the things that go into it. It's one thing to design and engineer it and have the product available, but then you also need the skill sets and the workforce that are able to make sure that these things continuously work and it becomes ubiquitous to how we access them daily.
Yeah. I mean, we need to have a major upgrade to our entire utility grid in the United States. I mean, one of the first steps is building better transmission lines through different states. One of our biggest issues right now is there's transmission lines stuck in permitting in multiple different states that could dramatically change the power prices for local communities. That's really step one. Step two is figuring out a broad-based program. We might see it come out of the federal government. We're not sure yet from a regulatory perspective, but a greater push on having, distribute or transmission level batteries, which are these large, much larger deployments of batteries than we're used to, not home style batteries. These are batteries that could power 100 megawatts, 200 megawatts for a few hours to ensure that we can create greater grid stability. Because oftentimes these brownouts or blackouts are really short-term issues where the demand surpasses the supply. And so if we can solve some of those issues via these transmission level battery deployments, we could actually create more stable grids. But that is hundreds of billions of dollars investment across the United States just to even scratch the surface of some of the issues that we're currently facing.
So Jim, to wrap up here, what's holding this up? I realize it's capital intensive and it does take time and so forth. And these discussions have been held at every level. What's holding it up? Is there any progress that's being made here to meet these aggressive goals that are not that far off?
So, yeah, I mean, there are lots of things holding this up. I mean, one, as Adam said, permitting for transmission lines can be a decade or longer. So same for power plants. So permitting is an issue. I think another big issue is coming up is really our supply chain. There's more and more of a backlog in terms of the transformers, and these are the devices that allow the power from the generator to feed the data centers and other consumers. So there's a backlog in transformers. As Adam said, there's much more interest in gas turbines now. There's a backlog in gas turbines. So with this unprecedented demand, we're having much more backlog in the equipment to meet the demand. We're having permitting delays. So I think those are the biggest things. And I think ultimately it's going to be who pays for it.
Right. Okay. Well, one more question then. Why are there permitting delays? Is there anything that can be done to help accelerate that? Recognizing that this is something that's not nice to have, it's something that we have to have. How can we accelerate that?
Well, I mean, the federal government and various legislation has tried that for years, and I'm not sure that we really have a solution, a good solution at this point to accelerate permitting.
Yeah. Well, it certainly is complex infrastructure around this. Appreciate both of your insights. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.